Hey guys, welcome back to another weekly trade recap. This is for the last week of December and the first week of Jan. Um, yeah, obviously I only took one trade for this week, and I only traded 2 of the days. So I only traded Tuesday and Friday. Why? Well, firstly, Wednesday was New Year's Eve, so I took that day off, and Thursday was a bank holiday, so I would never trade that even if I wanted to. And Monday I just was busy. So yeah, only Tuesday and Friday actually traded. Tuesday, no trades for me. There were a couple setups that could have worked, but they didn't end up working. And then Friday, I only took one trade. I should have taken two. I will get into that. But one trade and one win, which is very nice. But yeah, let's just get straight into it. So, firstly, I hope everyone had a very nice Christmas and a New Year's. Obviously, it is now 2026, so hopefully you had a good 2025, but let's smash 2026 together. Once again, I have a free Discord. The link will be in the description, so go ahead and join that. It's completely free. I live stream every weekday for free as well. So yeah, I'll see you in there. But yeah, okay, so also, just a side note, I didn't have a video for last week because I just didn't trade and I didn't have any trades. So there's no point in making a video just saying I didn't take any trades this week. But yeah, so let's get into it. So this was my only trade. Obviously, I said I only took one trade. This was it. So this was just after Friday AM. As you can see, it is 11 AM. We have this huge sell-off and we tap into this 15-minute LFVG, last fair value gap off the leg. We also obviously sweep liquidity and create a very nice SM2 ES. Create a very nice 1 minute. The only con is that ES does not have the 1 minute, okay? But we are very correlated, so to be honest, it is a bit fine. Obviously, it's a 6-point fair value gap, so that's completely fine, great size. And just look at the displacement. This is exactly what we want to see, okay? Obviously, if we just go back a second or a minute. So we create the fair value gap. It's not showing, but we have got the fair value gap here. Obviously, what we are now looking for is an inverse, at least a few points above. So ideally, we wait for, around 3 points or so above the fair value gap. But obviously, it just depends on context. But obviously, as you can see in the next candle, we get a insane displacement. How big is this inverse? This is about a 16, 17 point inverse. That is insane. Yeah, very happy with that. Obviously, you've got a very nice break-even point as well. This is triple equal highs on NQ, something that's a bit rare and definitely something that is very good. So that's amazing. Obviously, we've got it the same on ES as well. And the correlation is what we love to see, okay? You can see how NQ and ES, obviously ES on the right, NQ on the left, you can see how they are so perfectly in sync. They almost look the exact same. Obviously, we don't have the fair value gap on ES, but still, you can't get everything that you want, okay? But regardless, this is looking really good. So obviously, I entered on the candle close. I had a minor issue with Tradeovate, I think, because I hadn't taken a trade in like 2 weeks. It bugged out, but basically, I entered, and then it didn't. Basically, I got a bad fill, so I entered around here. But it's just because it just glitched out a tiny bit, but it's completely fine. Obviously, I still got in the trade. So ideally, I would have entered over here on the candle close, but I did end up entering around here. But regardless, obviously I entered. My stop loss was set. Usually I do 5 points below the fair value gap, but yeah, that was just where it was. And then ideally I aim for a 1-to-1 or 1-to-1.1. It sort of just depends. In this exact trade, I had a TP set at a 1-to-1. Why? Well, because once we go past this break-even point, this line right here that I'm just drawing right now, I'll make it yellow so it's easier to see. This line is a 5-minute unmitigated fair value gap. As you can see, these big red boxes, okay, these are fair value gaps. And in this, we have no liquidity really. We only have these unmitigated fair value gaps, okay? And then the next real point of liquidity is this swing high up here, okay, which is what? Almost a 1-to-5, a 1-to-4.5 R, okay? Which is just ridiculous if you are targeting that. Sure, you can leave 1 micro as a runner, but that is still just a bit of a stretch to go for, okay? Also, it is obviously in the New York lunch session, which isn't the best session. Obviously, AM, which is 9:30 to 11, is best. After 11, it does get a little bit worse, but hey-ho. So personally, because as soon as we went past this yellow line, there wasn't a clear reason for price to continue going up. My TP was just set at that 1-to-1, or I think it was about 1-to-1.1 thing, just so I had a little bit of breathing room. But yeah, and obviously you wouldn't have your TP set here because it's a 0.7 R, and you're risking less, more than what you're actually earning. So it's stupid to ever go below a 1R. Anyway, next candle. Oh, sorry, I did not mean to click play. A little bit of spoilers there. Next candle, obviously we come up, we go straight to the break-even point and tap into this 5 minute. And obviously the exact same on ES, which is gorgeous. So now my stop loss is at break even. Whatever happens, I am safe. I cannot lose any capital, which is such a nice feeling. But yeah, obviously next candle as well. Boom. Here's my TP and I'm out. Obviously I could have had it a bit higher, but how would I know? And yeah, and then next candle I believe we do. Yeah, there you go. So we actually come down. So this is a perfect reason. If you are still wondering, why do I choose 1-to-1? This is the reason. Okay, I literally just said it. There is no reason once we tap this yellow line why price would continue to come up. Okay, because the next point of main liquidity is very far away. So price is likely to come down and tap into these unmitigated fair value gaps, or maybe take out this low or whatever. Okay, so yeah. So yeah, I did take this a tiny bit lighter than a full position just because it was in lunchtime macro, and ES didn't have the fair value gap, but this was a very nice setup nonetheless. Very nice win and a gorgeous play for the 1-to-1 to work out. Right, okay, let's get into the trade I didn't take, but I regret not taking. And I will explain why. So it is pretty much just after open. It is right here. So let me go to it now. Okay, so here we go. So obviously open has happened. So this was obviously Friday again, same day, but just in the New York AM session. So in this example, we were bullish. Okay, why were we bullish? This blue line here, which I will extend just to make it easy. Actually, no, I won't extend it. But this blue line here, obviously it is a full line like that, is a daily unmitigated fair value gap that has not been tapped into, which makes it unmitigated. Okay, this is a very strong draw on liquidity. We do not often get daily unmitigated fair value gaps. So when we do, it is very good. And we were very bullish because we had inversed higher time frame fair value gaps. So for today, my bias was bullish. Okay, I'm not actually too sure, but I do believe around here we had a 4-hour unmitigated fair value gap. Okay, so my plan for today was to come down, tap into this 4-hour, get a nice V-shaped reaction, and come up and take out the daily unmitigated. But overall, this daily unmitigated was my main draw on the day. Okay, this 4-hour, if we took it, we took it. If we didn't, we didn't. It's just more context for longs. Okay, so that is what I was looking at. But we get this very nice 1 minute. Okay, why is this 1 minute so nice? Well, it is obviously, let me turn this back to blue. It is obviously just a 1 minute fair value gap. Okay, we have the same on ES. We are very correlated, and we're just looking very nice. We just swept liquidity. We do have an SMT with ES. It's far away, but trust me, we do have it. And it's just looking very nice. And obviously it aligns with our bias. And once again, we are close to this draw on liquidity being the unmitigated fair value gap. You know, we are only 115 points away, which obviously is a lot, but it's not, because it's such an insane draw on liquidity. It's actually not that far away, in my opinion. Excuse me. So basically, obviously, we are looking for an inverse above the fair value gap, you know, a candle close, and on both pairs. Okay, but yeah, we have a very nice break-even point on both pairs, and we have this high as well, which is a very nice take profit point. And then obviously the main take profit is this daily unmitigated. So if we go into the next candle, as you can see, NQ, we inverse it perfectly. Once again, as I said earlier, we have a 3-point or 3.25 point inverse, which is very good. So I'm liking that a lot. And there is this wick, but to be honest, I don't care about that wick. We are not tapping into anything. We do have this big 1 minute gap, but as you can see, because of this like wall that we've created, if you remember in a previous video, I talked about this, but in a wall, basically we're protected from it. So this wick is not being affected by this 1 minute. It's just wicking because the volume, and you know, obviously we are creating some big candles after open. So I'm not scared of this wick, and I'm still very interested in this position. So for sure, I would enter here, and I was close to, but as you can see, ES, it has not inversed. Okay, as you can see, well, that was horrible. That is also horrible. As you can see right here, the candle has not closed above the fair value gap, okay, compared to NQ. Now, you can 100% enter here if you are confident to do so. And if we did tap into this 4-hour unmitigated fair value gap, which I mentioned a few minutes ago, let's just say it is here. It's around this point, give or take 20 points. But if we did tap into this, say it was here, we tapped into it and that was the reaction out of it, I would 1,000,000% enter this, okay? But we didn't tap into anything like that. So I was going to wait. I basically said, okay, I will wait for ES to inverse and close above the fair value gap. But I was imagining that if we did, NQ would be way up here and it would be too close to the break-even point and it would be pointless to enter, basically. But some people did enter here. And if you did, I wouldn't blame you. It's your confidence. But for me personally, I look for realistically one amazing trade a week. And that's basically what I bank on. I don't take loads of trades. Ideally, I only take about 3 trades a week, if that. So this isn't perfect in my eyes. And this is not as good as the previous trades that I took, just because of ES not inversing. So I stayed out. And yeah, I'll play the next candle. So obviously, as you can see, ES now has inversed and NQ has moved up, but it's not that close. We still got a decent bit of distance for the break-even point. Now, I would have entered here, and honestly, I don't know why I didn't. And obviously, there's hindsight, and you probably don't believe me, but I was truly thinking about entering. And I was literally talking to the stream. Obviously, I stream daily and for free, so join the Discord. But I was talking to the stream and saying that I would 1,000,000% enter if ES inverses in this candle. Okay, while this candle was forming, I was like, yeah, I would definitely be interested. But I think I just got a bit distracted with chat, and it's my own fault. 100%, I will take it. I'm not blaming anyone, but I just got a bit distracted and wasn't thinking properly. And in the next candle, we do end up taking the break-even point. So as soon as we tapped that, I was then, okay, I'm not entering because it's stupid. You should never enter a trade if the break-even point is taken. If you're already in the trade, of course, that's great. Go break even. But if you, if this is the example right now and break-even point is taken, do not enter the trade, okay? Because price could easily just reverse and come down. So obviously, I would have entered around about this point, about a 34-point stop, 5 points below the fair value gap, and obviously on this candle close because ES inversed the fair value gap. Okay, obviously I would have now gone break even at this point, and then in the next candle you could have been taken out of break even. It depends on where you put your break even and where you got your entry. Realistically, are you going to get an entry as perfect as this? No, you probably would be a bit higher up. So even if I did enter, I probably would have got taken out of break even, but hey ho, it just is what it is. But let's imagine, so obviously 1-to-1 set. Okay, so yeah, obviously I didn't enter this, so it is what it is. It's a bit annoying, but that's trading at the end of the day. This trade did work. I'll spoil you in that. This trade did work, but what's great about not entering and seeing a trade work is that you have confidence and reassurance in the strat and that the fact that it does work, and you will do it next time. So anyway, so here's what I would do if I did enter this trade at this point. And I'm not doing the example for this counter close because I just wouldn't, as ES hasn't inversed. So if I entered that and I stayed in, I didn't get taken out of break even. Obviously this is my 1-to-1, okay? But what I would probably do is put my take profit point about a tiny bit below this high, okay? Why? Well, so price, obviously it does target liquidity, and I would expect price to take out this high. And obviously it's so close to the 1-to-1 point, why not? But I wouldn't have it exactly on the high because too many times I have seen people put their take profit point at the point of liquidity and price is so close to tapping it and it just doesn't. So I would always do, a few points below just to secure the profits. And what is like, I'd lose like what, $5 from that. So it's nothing. But yeah, so that's what I would do. And then I would probably just leave a runner, like 1 micro for the daily unmitigated, because I don't expect the price to take it, but if it does, it does. And what do you know? What ends up happening? We storm through that high, which is unbelievable. And then I think take a second, but then we end up running through the daily unmitigated, okay, which was insane. This trade, it's the biggest. It's very annoying to see this. You know, a trade of this scale works so well, but it happens. It's trading. Don't get caught up on it. The biggest thing is I didn't lose anything here. Okay, I missed out, sure, but I didn't lose anything. So why get angry? Yeah, it is what it is. But yeah, just hold your hands up at the end of the day. But yeah, that's pretty much it. So obviously I only took one trade, the lunchtime session. I did want to take this, but I just didn't. Yeah, I just didn't, is what it is. But yeah, that is it for the trade recaps. Obviously, we are starting a new week tomorrow, Monday. We've got lots of red folder, so be sure to trade. It's going to be a great week. Once again, I live stream for free every day in my free Discord. The link will be in the description, so be sure to join up. But yeah, let me know if you guys took these trades or any trades this week, and I will see you guys in the next video. See you later.